to this session on driving a successful privatization program in Sub-Saharan Africa. Sub-Saharan Africa, as you know, urgently needs more dynamic private sectors and their renewed vigor for privatization in the region in particular. Angola in Southern Africa is pressing ahead with an ambitious program that aims at transferring the ownership of at least 190 state-owned enterprises to the private sector. And the government expects the program will help generate local jobs, boost sustainability, and trigger quicker economic growth. Key to this success will be transparency, policy certainty, and political stability, as our panel will discuss. And indeed, in this session, we will discuss privatization and investment in Southern Africa. We have with us today an excellent panel to share their insights from decades of experience and help us understand privatization in this exciting region. We have Kevin Njiraini, who is the Regional Director, Southern Africa and Nigeria at the International Finance Corporation. Pieter van Welzen, a Senior Consultant, Financial Markets Africa with CMS in South Africa. And Sunita Kikeri, who is a World Bank veteran of more than 3.5 decades. And Sunita, if I am just to start with you, could you help us set the stage with how far privatization has come in Africa?
Okay, thank you very much, David. I've been at the bank for so long, and we began tracking privatization transactions in all regions of the world, and then especially in Africa at one stage. And in the region, it started in the late 1980s and the early 1990s. And by 2000 or so, we had tracked well over 3,000 transactions that had taken place in the region. Transactions were mostly concentrated in a core set of countries. This included Mozambique, Angola, Ghana, Zambia, Kenya, Tanzania, and Guinea. So that's where most of the activity was happening at that time. These were relatively small transactions in early years, but over the years down the line, they opened up to more complex SOEs and opened private sector participation in focus on private participation in infrastructure. In terms of example, in Nigeria with the port concessions, Tanzania and Ghana, the sale of telecom shares, share sales in Kenya, Rwanda, and South Africa. In most SOEs, however, or in most countries, the SOEs continue to operate in virtually all sectors of the economy, including manufacturing and services that had long been designated for privatization. So sales were announced, but often they were not ever concluded. I think the process played out over the 1990s and the 2000s, but to me, there was a turning point when the global financial crisis hit in 2008. And that's where there'd already been a lot of rumbling about, negative rumbling about privatization. And that was the turning point where there was a swing away from privatization to more of a renationalization approach in some countries, and more of a shift to corporate governance and private sector participation in enterprises rather than full outright privatization through management contracts, leases, concessions, and so on. So now I think the bank, just before I left, the bank had adopted the MFD approach to privatization, which is maximizing finance for development. And this is something that now is being applied across different countries in Africa and also around the world. The aim of this MFD approach is basically to leverage all sources of finance expertise and solutions to focus on sector reforms, basically to improve the enabling environment, build capacity, and establish standards and find ways to find first innovators and movers. So overall, I think we've come a long way in this privatization debate. So we've seen so many different approaches that have been put in place that have led to a spectrum of solutions, public and private solutions. We've incorporated global lessons and also addressed equity and affordability issues through many of these projects, and basically seen that there's to be, going forward, a mix of public and private funding to meet development needs.
Thanks, Sunita. And it looks like indeed a lot has changed, except the one single thing, which is it is still an emotive issue. And I'm sure we'll discuss this a little bit later in the conversation. But I want to bring in Kevin. From your experience, could you tell us what has worked and what hasn't? And here, feel free to bring in examples from across the continent.
Thank you, David. I'll say that at a macro level, privatization has worked, particularly if we keep in mind that governments turn to privatization as part of the economic reform program, as Sunita was saying in the 80s and 90s, to revive economies and spur growth. And so in the face of the success of privatization, I would say a number of countries have sought better ways to partner with the private sector, to leverage their capabilities in financing, and in the latter years to public-private partnerships, or PPPs, especially in regulated sectors. To be more specific, I'd say early wins were recorded in the telecom and the electricity sectors. These are examples in which private sector participation was preceded by robust regulatory reforms and sector liberalization, which successfully attracted the private sector players. The infrastructure is a good example of where the private sector can really drive change. And if you think about it, you have 600 odd million people in Africa who still don't have power, over 300 million people who don't have access to clean water, and broadband reaches probably less than 0.5% of the population. And so I would say a recent example of where we've seen the private sector play a valuable role, I'd say, is in the energy sector, specifically through the World Bank Group's what we call the Scaling Solar Program. I'll give you two examples. In Zambia, the Scaling Solar Program made it more affordable for Zambia to pursue solar solutions. And this lowered the risk for solar providers seeking to enter into this new market. In Zambia, we've had 2 solar PV plants launch operations just this past year, and they will provide energy at one of the lowest tariffs for electricity in Africa, which also helps reduce CO2 emissions. I would say another sector is telecoms, and this is where we have seen the private sector play an important role in rolling out digital infrastructure and services to more people. This will include whether it's setting up communications towers, fiber cables, mobile networks. And the recent case of Ethiopia is one which I think many of us will be familiar with. In last year, in 2020, the government of Ethiopia asked us as IFC to advise on the structuring and tendering of 2 telecom licenses. And in May of this year, the government awarded the first competitively tendered license to the highest bidder. I think this resulted in the government receiving an upfront fee of over $800 million. And while the money is substantial, I think it's beyond the money. We can look at the benefits that the project is expected to bring. I would say the liberalization is going to help connectivity to the most vulnerable communities. It will enable them to have access to digital services, for basic services like education and health and emergency, and also access to information, remote working, which all of us are very familiar with in the pandemic now, and e-government services and so on. And so I would say that, it definitely has helped. And I think the cascade approach is how can the private sector bring solutions first before encouraging the government to come to the fore?
Thank you, Kevin. And the Ethiopian story, of course, is one that we are really, really closely watching as a frontier market. But let's zoom in on Angola, which, as we know, is put up many assets for sale and a privatization. And if I'm to ask you directly, Kevin, I mean, the Angolan government is looking to diversify away from oil. It's looking to, grow jobs. It's looking to accelerate its economic growth. Will this work? We've seen it, in places, Nigeria and elsewhere. But for Angola, if we're to ask you a question, how will privatization bring about growth as a channel?
I would say it will make a difference. When we think about it, there are many aspects that they're looking at. I mean, the country has over 195 state assets, and the idea is to tender this across all the sectors, including the financial sector, industry, agribusiness. energy, transport, financial services. And so there's a lot that is being done. But in terms of just will it bring growth directly? I would say yes. And if you think about it, one of the advantages is that let's look at the growth inhibitors, right? So privatization helps alleviate the distortions and efficiencies of SOEs, as Sunita said earlier. I think another consideration is that privatization can raise funding to settle the debts of accumulated SOEs. And many investors, not just in Angola, but many countries do have huge amounts of debt. And so by bringing the private sector, it can free up the fiscal space for growth and development. We have seen many governments, committed governments, and we know that the Angola government is committed, put in place private sector enabling environments by reforming sector-specific institutional, legal, and regulatory frameworks. What has also been good to see is governments adopting transparent processes for service delivery and engaging with multiple stakeholders to drive private sector-led growth. And so, to meet the needs of developing countries, we need to preserve the constrained private resources by bringing the private financing, which I think is what Angola is doing. We see the private sector designing sustainable business models to support financial inclusion, promote trade, access to internet, and so on. And so by bringing in all these new investors, it allows the government to use the resources to be directed to other areas. And so as we have seen, not just in Angola case, but also in the Ethiopia case, we can bring on board best international practice. We can facilitate fair and transparent entry of the private sector, which can enhance the quality of service across a myriad of sectors and change millions of lives. And so in a nutshell, yes, we're confident that it is going to work.
International practice indeed, when you're dealing with, international investors. Pieter, you have worked on many of these deals. You have actually worked on Angola and elsewhere. A simple question, is Angola's plan feasible?
Well, I think if you look a bit at the proof as in the pudding, then I think it's interesting. Perhaps also good to note that the number of, let's say, privatization projects has been reduced somewhat. Some have been added, some have been. So I think there are about 140 now, but I think that around 40 have already been successfully completed. So I think if you look at it from that perspective, then yes, it's certainly a feasible kind of plan. I think what you have seen, I think, is that in particular, let's say the smaller assets have been used first actually for the process. So there's still, let's say, quite a lot of interesting larger assets to come. And I think it also Kevin already mentioned, I think it's the financial services sector is quite predominant. Also, I think the telecom sector is present. And I think what we should also recognize is that it's a bit of a mixed bag. So in some cases, it's just a couple of percentages of shareholdings that are being offered. In others, it's like a full 100% holding. In some cases, there are joint venture partners that still need to be convinced that the Angolan government should step out. And so there's a bit of a number of things that still need to be sorted out. I think one important aspect, I think, and if you compare that perhaps to, let's say, some of the, let's say, more traditional privatizations, is that it does not really include, let's say, very critical assets like utilities, water, electricity are not. I mean, there are some crown jewels there like Sonangol and Diama and TAG, but these are already companies that have, let's say, have a kind of a more commercial function. So I think from that perspective, is it going to be feasible? I think the feasibility will need to show in the end in the result. And I think that's probably, in particular with the larger assets, that's going to be quite interesting to see how that will work out.
And thanks, Pieter, for mentioning some of the crown jewels. Sonangol, the national oil company, we know many investors are excited about that one. But I mean, Pieter, you spend every day at work talking to these investors. Could you tell us the reputation of African assets in the eyes of these investors? How do they price these assets? How do they look at them? And while you're at that, could you also tell us where this capital is going to flow from? Are we going to see, IPOs? Are we going to see money parachuting in and just, paying off government and picking up these assets? Could you give us some more details on how this is going to be playing out?
Well, if I look, let's say, like focusing a bit on the Angolan situation, perhaps, and let's say the assets they have, but I think it's also kind of a more general perspective. I think you still have, let's say, the traditional investor perceptions of African assets, and I think some points are already mentioned: transparency, capability in the country where there are not there's a sufficient expertise workforce, infrastructure, political influence. So you have all these kind of, let's say, traditional, sometimes I would say, prejudices against investing in Africa. But I think what you see is that quite a lot is changing. I think if people look a bit closer at what is happening in particular countries in Africa, you also see that many of these kind of potentially negatives have gone away, and that investors actually get more excited about different aspects that you can determine. I think the technological changes that are taking place, the use of internet, fintech, for example, which I think is very interesting, how that is developing. And I think if you look also that from an investor's perspective, what you also see is things like ESG, sustainability, and so on, because also become kind of important items for investment. And I think many kind of Africa assets, many African projects actually could fit quite well in that new kind of focus on these kind of new trends. I think if you ask me, like, what are the capital flows going to be? Well, I think it depends a bit, let's say, on the nature of the business. So you can imagine that these kind of international companies like Sonangol and Diama and so on will certainly create quite an interesting international investor base with big institutional investors. I think if you look at the program, for example, you also see that there are kind of smaller assets and perhaps more regional assets in the form of industry, agriculture. You can imagine that there it could be quite interesting to see how, let's say, regional investment is going to work out. In particular, also if you look at the African, the economic union, whatever that's going to take place. So I think it will depend on the asset what kind of flow will come, but I think it's certainly becoming more and more attractive for foreign investors to.
And I'm glad you mentioned ESG, because that is an emerging factor. I mean, everyone is talking about it as a consideration these days in investment. And I'd like to ask Sunita, not putting you on the spot, but what are the conditions, from how far we've come, as well as the new emerging factors to consider while investing? What are some of those conditions that ideally would help our privatization programs succeed today in this region?
Well, there's the usual list of things that come up in terms of, the conditions for successful privatization. I think one of the first ones is really strengthening country preparedness. There is often a lot of opposition to privatization. So how do you build the case for making these companies, move from being wholly state-owned to being private companies? These are crown jewels, of the economy, and there's just a lot of significant resistance and pushback from a lot of different quarters. So I think one of the key issues is how do you build and prepare for privatization in terms of the countryside? How do you, from the countryside, how do you put together sort of the key components that are needed to have good privatization? A clear legal framework, like legal and regulatory framework, an institutional framework, institutional capacity, having a proper privatization agency in there that has the clout and the ability and the strength to push through these controversial reforms and to make these privatization transactions happen. So strengthening country preparedness and making sure that the country has the basic foundation to lead a privatization program and to implement the program. I think that's one of the critical pieces that needs to be addressed. A second key question is or issue is the nature of the market into which a company is being divested, whether it's competitive or non-competitive. Now, on the competitive side, we know that privatization is going to yield, in competitive sectors, yield solid results, and there's no real question about how this process is going to go. It's pretty straightforward process through auctions and tenders and so on and so forth, the competitive bidding. The more Obviously, the more challenging side is on the non-competitive sectors, and there I think these enterprises are larger, the stakes are much higher, there's much more resistance within these companies, there's lots of inefficiencies, there are lots of policy and regulatory issues that need to be resolved. So that is really a different ballgame altogether, and I think the question is, how do you take some of these companies individually and transform them? You may have to have the legal regulatory framework. Well, you will have to have a legal regulatory framework in place. Talking about Ethiopia, I was working in Ethiopia for a long time before on this very issue in terms of public enterprise reform, starting from scratch. And there to develop the legal framework for privatization and also the state ownership framework in terms of the laws and regulations. That took us almost, I want to say, close to 1.5 to 2 years, because these processes are, in terms of the client country, there are lots of different opposing factors, and people are fighting tooth and nail about every single thing that goes into a law, because once you have that law, then you're stuck with it. So we spent a lot of time just having the basic foundational laws in place to facilitate a proper privatization process. Then we worked a lot with the Ethiopian Ministry of Finance and with the team that is in charge of oversight of the program in terms of understanding the sector, in terms of disaggregating the companies, in terms of putting strategies for each sector there. So it's a long time consuming project. There's lots of opposition that comes up from different quarters. So we have to make sure that the political economy issues are being addressed. And I think in terms of sort of how to move forward, the country conditions do matter. So it's much easier when the country has a market-friendly policy environment, when there is that clear legal and regulatory framework in place, the institutional regulatory capacity, and also the macro and public sector reforms. Now, one of the key issues is whether, speed matters. There's some people who say just privatize quickly, get this out the door. But is there something else that needs to be done? I mean, speed is fine, but if you rush through a transaction, doesn't come out just to get it done, may not come out easy. So you also have to balance it with, making sure that what is being done is right. The speed versus that balance, I think it's, make sure you don't want to be giving away special privileges and protections and so on and so forth. You have to make sure that process is done properly.
And that's, and that's a lot to unpack. And I'm going to be asking Kevin as well about the way forward. But briefly, Kevin, if I know countries are different, but if I'm to put a scale of 1 to 10 from what Sunita said, how prepared are the countries when you're launching or want to launch a privatization program?
I think it depends on, each country is different. Some are further along the journey than others. And I would say it's really the outlook of, is there an acceptance of the cascade approach? In other words, that if there's a role for the private sector to first participate, then it limits the government's use of its own funding for truly development aspects. And I think if that perspective is in place, then we find things a lot further along. If that perspective is not in place, then there's often an education process. I don't think we've not come across like, we will not do so. It's what are the benefits of doing this, right? Because some, governments have different views of what are, as was described, crown jewels. What are the real estate assets that need to remain in the hands of the state? Those conversations are ongoing across different countries.
Yes.
Okay. Pieter, let me ask you about the risks. What are the risks involved? What should investors be aware of? What are those domestic nuances they should be aware of when they want to come in and participate in these ventures? I mean, to talk of Angola, for instance, I mean, they want to open up. We have seen risks associated with privatizing before. It could be an FX risk, it could be a social risk, it could be a political risk. And like Kevin has said, there's some crown jewels and people are quite emotive about them. What are the risks involved? What should people be aware of?
Well, I think yeah, you already mentioned some of the, let's say, the risks, and I think people who have invested or work with Angola are aware of the issues that have arisen from the shortage in foreign currency and the difficulties in getting money out of the country. I think that is something which people, let's say, have to realize that maybe the issue is there. I think as a result of the increase in oil prices, perhaps it's improving. But I think some of the risk, I think that you mentioned, and I think both Kevin and Sunita already mentioned, I think things like having a developed kind of legal framework, having thought about the process and so on, I think that has been done. So I think in itself, there is quite a established legal framework for the privatization, but also, let's say, for private investment generally. I think what also has been helping to mitigate the risks, because I think one of the risks indeed is that you end up with, as an investor, with assets that you cannot really use or apply, or that are subject to all kinds of discussions and in fights with employees. So I think one of the things that has been done, I think people have learned from the past. People are also learning, I think, who are currently working in the privatization department about things that things that. So I think that's quite positive. So I think that, yeah, there are let's say the risk, but I think the Angolan government has been trying to mitigate them. I think what I find also to consider, let's say, a risk on the other side, and I think that's quite important, particularly for assets that need, let's say, also the input of know-how, is for the Angolan government to find the right type of investor, and also to have, let's say, adequate legal arrangements that actually oblige these investors actually to comply with their obligations. I think quite often we look at it from the investor side, but it's also important to look at it from the other side.
And one of those things the countries usually care about is local content. Sunita, you should know this, better than everyone. In terms of local content, and it takes, different shapes and forms. It could be restructuring labor, it could be local supply chain. Tell us a little bit about this and what governments should be doing to ensure that they address this appropriately with investors.
This is, I guess, I haven't really given that much thought to local content, to be perfectly honest. But I think in terms of certain issues when it comes to state enterprises, certainly on the supply chain side, yes, that, to the extent that they can build in local content, I think that's one of the critical issues. The other issue, I guess, on the local side is in terms of these SOEs themselves. If you think about privatization and restructuring, there's quite a bit of local staff in these companies. Many of these SOEs are overstaffed. There's a lot of overstaffing there. So how do you, make sure that the local population is protected through, severance packages, retraining programs, finding ways to move that needle. So, I think it's an issue that cuts across many different parts of
I'm afraid we have 1 minute left. And in that, I'm just going to ask Kevin the final question of what is the outlook as far as privatization in this region is concerned?
I would say that, particularly in light of COVID pandemic, with so many government balance sheets under strain, the private sector will need to play a bigger role than it did in the past. I think Africa will need, I would say, $280 odd billion in the next 5 years, just to accelerate the economy and fight the pandemic and climate change. I'd say also with things like blocks such as the African Continental Free Trade Area, this would require the full involvement of the private sector. And so the outlook for privatization, or rather greater private sector involvement is definitely bright. Considering that these programs can reduce the state's footprint in the economy, they can promote private investment that enhances job creation, and they can lead to increased tax collection, and also promote greater availability of products and services for all the citizens.
Right.